and welcome once more to another edition of the Open Door Show from Property CEO. Hopefully you're enjoying these shows. Please make sure at the end you like and subscribe, because if you didn't like it, don't subscribe. But you're going to love this today. You absolutely will. We're, as always, over the next 30 minutes, going to be taking a deep dive into the world of small-scale property development, small scale being really important. We want to get you out there doing this. So if you're listening to the first time, you're thinking, should I get into property development? Maybe have a think. I've got something for you at the end, so stick around. We always try and talk to a few movers and shakers, people out there in the industry that can give us a bit of an inside track on what's going on and help you maybe start your journey or progress your journey in the world of small-scale property development. But above all, most importantly, if you've been here before, we try and have a bit of fun doing it because life is far too short not to. So what's coming up on today's show? Well, we have a fantastic guest, okay? This is a guy who runs a financial company here. I know his business partner very well, and we're very pleased that they're actually going to be coming into the room and doing some work with some of our students. So look out for them. Of course, if you don't like them today, don't look out for them. But on today's show, I've got Hugh Spillane. He is I think he's the Chief Commercial Officer for DNA Financial Solutions. So hopefully Hugh's there. Hugh, are you there to join us?
I certainly am, Richie. Thanks ever so much for that kind introduction. I'm delighted to be here.
How are you? Well?
Yeah, very well, thank you. I'm actually in my timeshare in the lakes, working home away from home. So I've got a glorious outside space to go into after this chat today. So yeah, in top spirits this week. Thank you very much.
Great stuff. Great stuff. Hugh, some people won't have heard of DNA Financial Solutions. Some people will have done, but for those that haven't, could you just explain who you are, what you are? Is it just you? Is there other people? What you do?
Yeah, of course, I'll be absolutely delighted to. So, DNA Financial Solutions, we are a finance and insurance brokerage. We're based out of two offices in the north of England. One in our main HQ is in Halifax, West Yorkshire, and we have a satellite office in Skelmersdale in Lancashire as well. But the reality is we work with clients across the UK and international clients investing in property in the UK. And, a lot of our work is done telephony-based, video call-based, just like this. So we are very hands-on in the way that we work. 25 people in the team, a mixture of client services team who work on the front end of our process, brokers and case managers across a whole host of services. And, the DNA business over the last 18 months to 2 years has really focused on a particular niche of client. That niche is property investors, business owners and entrepreneurs. That's exactly who we like to work with, who we are specialists and experts at understanding the quirks of them as people and their deals as well. And, from a service point of view, what do we actually do in that finance space? It's the full spectrum of residential and commercial property finance. And of course, the way that we work, and I'll come on to some of the ways that we work and the conversations that our broker team in particular have, is a very different and holistic way of working. But we do spread out into the business finance and insurance space. But for the purposes of this call, Richie, I'm sure we're going to focus heavily on that personal and importantly, corporate and commercial property finance space.
Yeah, definitely. That's great. What a great introduction. I love the fact you said we do things a little bit differently. Let's talk about property development. Okay, we'll talk about property development finance. As you say, those businessmen, those entrepreneurs, those businesswomen who want to go out and do these small scale developments, primarily focused on, for us, for most people, we try and focus them on a conversion of an existing property because we're trying to minimize their risk. They could do new build. But what makes DNA different then to other brokers that are out there?
Great question. Look, in the first instance, we're independently owned, a small medium enterprise. I would describe us as, and I'd encourage anybody in this space, if they are brand new to development finance, or an experienced development finance investor, that they use a broker, whether that's DNA or another independent brokerage. I'm a huge ambassador for those types of businesses because I think it's where you genuinely get the best advice. But coming to DNA,
I think you're saying you don't suggest other brokers. You're actually suggesting just DNA, aren't you? You can't say whether you use another broker. Surely you've got to say DNA. There's no other broker you can use. Now, I know there is others, but you've got to assume there isn't.
Well, I'm not that sort of naive to think that's the case, Richie. There's some really talented people in the industry. We definitely think at DNA we've got some of the most talented people to arrange the finance on some of the most complex transactions you can probably come across in the UK, and we're actively doing those deals right now. I'll give you a few ideas of the unique ways that we work. When you come into DNA, you'll actually have 3 people in your corner at any one time working on a case, and that's so important when we work on deals that are slightly out of the ordinary. They're not straightforward. There's not always typical mortgage structures and finance structures that you see in that residential space. So you're going to be supported by a client service executive who helps qualify where you're at as a person, as an investor, and where your deal currently sits and who you're best speaking to in our broker team. You'll then speak with a broker who is specializing in your type of project, you as a client, where you might be geographically or where you're investing geographically. And then we've got case managers who've got different experience as well. In short term and longer term, some of the ground up developments, and then through to, of course, those commercial to residential conversions. We have people in those different niches. So that's a big thing that I'm a huge ambassador for, is having people working really, really intensely on things that they're extremely knowledgeable about and where they have the skills to add value. Because, we are an independent broker. We charge fees and proudly charge fees, but that's because I believe that we provide a service that, we have to do that in order to get the right outcome for clients as well. And what we've been able to do by, developing that team out and the size of the team that we have, like I said, we've got 25 people in the business now, and there's 4 directors who run the property finance business. What we've been able to do with that size of team and the amount of deals we have done brings us on to actually, when we start to position cases, work with lenders. We've actually developed some fantastic relationships with lenders, package of status with lenders, we would describe that as. And what
does that mean, package status? What do you mean?
Yeah, absolutely. Great question. I was just about to describe that. That is essentially where we have built a relationship with a lender. We do, in essence, a small and but dedicated part of almost the underwriting process for them. So we work alongside their underwriting and their commercial teams at the lender to help them appraise the deal, start to look at the valuations of the property, start to understand the client in a bit more detail than you would on, say, straightforward residential properties.
Yeah.
But by doing that, there is a reward. And we built the relationships at the highest level of those lenders, where we are being now offered exclusive rates with certain lenders and certain products, which is really exciting to see. And importantly as well is exclusive turnaround times. So what's really nice is that when there is a big long list of clients who are in that lender's funnel, some from us, some from other brokers, in rare instances some people can go direct, but many of the lenders we're talking about now are intermediary only.
Yeah.
If we need to get something done, we tend to go close to the top of the pile, which is a really nice position to be in. And look, that is a reward for us, focusing on this area, focusing on these types of deals, providing lots of work to these lenders, and they want to see more from us. So we know where clients fit, we know where projects fit. And I think that all starts to combine in that, how does our mindset work in our business? It's a very holistic way that we look at deals and how we critique deals. We will, of course, try and get finance where it is appropriate. But what I'm really proud of the team, this might sound slightly counterintuitive, Richie, is that we will say no to certain deals as well. I think sometimes saying no, or say, take a breather, let's think about this and think about another way of looking at it, or potentially another project in some instances. We've got to get the right outcome for the client. We have a duty to do that with our FCA authorizations and our consumer duty regulations. And morally and ethically, it's the right thing for us to do. So we look at things slightly differently, but I hope I've covered a little bit there about what is unique about the support DNA provides, who we work with, and how we like to offer that value to clients.
Come back with a question there, Hugh. You said we charge fees. We're proud of charging fees. Is that a fee to, so our wannabe developers on here, or our existing developers, they got to pay you a fee for you to go and find their finance? Is that, that might be a little bit unusual. What's the benefit to them? Because some people might go, I don't want to pay a fee, or should they be thinking differently about this?
Yeah, I think they do need to think differently about it, if I'm honest, because the reality is, you probably didn't need any more of an experience of last year to realize why paying a fee, using a broker, is the right way to go, even on some of the most straightforward mortgage and property finance deals in the UK. Because overnight, you were seeing lenders doing very strange things, providing offers to clients, actually withdrawing offers after providing, an offer that's credit backed. And that is very unusual to see. But that was the nature of swap rates, which is how lenders position their margin and their prices, and the Bank of England base rate being so volatile, and how the media impacts that and impacts the finance and property market. Now, why I would highly recommend in the first instance, clients use a broker, but also pay a fee, is that there is skin in the game there. We feel an obligation to do a fantastic job when we are charging a fee for, a client to work with us. Now,
typically, what sort of fee we're talking about?
Yeah, I mean, on complex commercial deals, we're going to be charging fees that are in the region of about £995. But that is from £995. When we actually work with a certain set of deals, where we work with a certain set of lenders as well, we can potentially charge that fee on completion. We don't charge anything upfront or outstanding, but we can charge on completion as well. So as part of the whole package, looking at a deal, there wouldn't be a cash outlay from a particular client, but actually when we get to the end of the process, get to the end of the deal, that is where we would get remunerated by the client. It's all part and parcel of it. So you might have clients who look at it.
Sorry, Hugh, just to cut across, but I'm guessing what we should be looking at here, as developers always, and encourage everyone who's listening to this, it's not just about that rate, it's about that overall package. And what you're saying here, okay, there's a fee where you might have someone over here that might not charge a fee, but are they giving you that same service and same commitment? So I guess you're saying here we should look at the entire deal, which includes a fee, but actually you're confident by you having a much bigger commitment because someone's paid you a fee, that entire deal is going to be better, more secure than perhaps it would if you didn't.
Yeah, and absolutely. And we are absolutely whiter than white on the compliance side of things, but we have to take a view of how we communicate with certain lenders, whether that's how a deal is introduced, client circumstances, a deal in itself. We package the deal up. We give the information that a lender needs to move a case forward, but also we're looking to get deals through that we know are, if they're profitable, that's absolutely fine. If we know they're great for the greater good of the equity in the deal, that's absolutely fine as well. But there's certain ways of communicating with a lender that actually, as a client on your own, sometimes you're just not able to do that and you have to go through an intermediary. Other times, if you're left to your own device and you can communicate that, you may not know of some of the preferential phrases, let's say. You may not know of some of the particular ways and mechanisms of how lenders work. And that's where the broker comes into it. And Richie, things change as well. So if you pay a fee to DNA Financial Solutions, as an example, and you work with us and we put an application in, we're moving your development finance forward. If something changes in the background, if there's a valuation that doesn't come back, it's absolutely where we think it might have done and maybe should have done in some instances. We're the type of brokerage that is actually picking the right surveyor and valuer to go out that knows this area, knows this property type, for example. And if not, we can replace it. But it's the speed and it's the efficiency that we do this, and that we have, great pride in charging that fee, that we think, right, we've got to do something here. We've got to fix this. We've got to get it right. And look, we pride ourselves in getting things right most of the time, first time round. It should absolutely be that. But things change all the time. Deals change, personal circumstances change, lenders and surveyors change their criteria all the time. We are much closer to that information than, a client will be. And I just heavily encourage them to work with a broker who is just incredibly knowledgeable about this space, and not be put off by a fee. Because think about, if you go to a broker or go down a project yourself and it is delayed by 2, 3, 4, 5 months by misplacing the finance, for example, how does that affect your margin? It doesn't affect you to the tune of, let's say, a 995 client fee, or sometimes our client fees are higher than that. They might even be 1% of a loan amount, depending on how much work. It's essentially just how much work we put into that deal is what we need to charge. When we charge it is based on what lenders we work with and the client circumstances, and we can be as flexible as possible. But if you have even a medium-sized development finance project you're working on that is delayed because finance isn't done right the first time, the numbers that are involved, either equity or profits, gross development values, etc., they're exponentially greater than the cost of a broker. And I think that's probably the best point to kind of box that client. Yeah.
Perfect. Nice answer. Just thinking about the process. Okay, so I don't know when this fee kicks in, but when should people contact you? So we've got developers of ours, students of ours that be listening to this, and they're thinking, hey, I'd like to contact DNA. I'd like to see what they could do for me. And they're at very early stages of a project. What about a decision in principle, stuff like that? When should people come and talk to you? What's this process for starting out with maybe a decision in principle and then following through. Could you just highlight that relatively quickly for me?
Yeah, absolutely. And I suppose the first part of my response is quite an unhelpful part, in that the earlier the better. Even before application, pre-application planning, all that kind of stuff has gone in. I probably should have added this to my first response of what makes DNA a bit different, is that we are happy to have the conversations that don't immediately move into a decision in principle or an application for finance, because we respect that there's a big education piece here for new and seasoned investors, because things are changing all the time. So there's actually no early point. In fact, sometimes the earlier the better. But the reality is that, yes, we want to have that conversation when you've got a project in mind, when there might be a site there, or in actual fact, you may even be close to have an offer accepted on a site. We probably expect some level of education to be done. That might be in your own research, or having a quick conversation with our client services team, or a more in-depth one with a broker if it's a really complex deal. But the reality is you want to be fairly close to having a site in mind, probably of having seen that site, or even in a conversation with the vendor or the agent. And when you're pretty close and you think the numbers might stack on this, that's a great time to get the broker involved, making sure that your circumstances, but importantly, the deal stacks up, and that there was lender appetite for that project in that geography, for that end product, that GDV as well, and building in, of course, those development costs. I think that's a really important place to start from. So just to recap, the earlier the better. But actually, you can go right to the point of being finger on the button of saying, I want to put an offer in on this scheme. I need to get DNA or a broker involved to make sure that the numbers work for me personally and for the project.
Love it. Let's talk about, can we ask about structure of deals? So let's assume we're going to do a conversion project, okay, for the reasons I've talked about earlier on today's show. Potentially, we can borrow up to 70% of the purchase and 100% of all the construction costs. There's obviously a process that we can bring some private finance for that 30% and have some skin in the game ourselves.
Sure.
Could you just outline a little bit about what you would foresee here at DNA there in terms of minimum skin in the game for our developers, assuming they've got permitted development rights, and how we can structure a deal? What about people often talk about, and I know a lot of people don't understand, so maybe you could explain about senior debt, mezz debt. How do we structure deals?
Yeah, it's a really good point. And the numbers that you've worked off there, 70% or so of purchase and 100% of the construction costs absolutely can be achieved. The way we look at it is, let's have a best case scenario. That's pretty close to it. When you start to think about things and the important variables within a project, so we might be thinking about the relative experience of the developer. We might be thinking about the site in question, the utilities for that site, the age of that site, its current condition, actually the end use of that project. The level of commercial to resi can, of course, be different. I suppose the length and breadth of that conversation is one that we would have with the client, and then and picking that correct lender. And when you've talked about senior debt and mezzanine funding, we're just looking at different tiers of charges against properties and timing of debt as well. And we've had projects previously where we have even pre-planning application. We've raised finance for that as part of a greater finance package, drawn down funds for that, arrange planning. You then draw down funds for the actual purchase, and it might be an option agreement that gives you time to even delay that to a degree. But what we want to do is we want to be in a position where ultimately the developers that work with DNA are paying as little interest as they can over a shorter period of time. And one way of doing that is just completing deals quickly. But that's a rather fickle way of looking at this, and actually having tranches of money that we're working with our lenders and saying, well, actually, if we draw down A, B, and C in this order, your ability to actually apply interest to that, and therefore the end value and the end margin of the project is going to be exponentially greater. That's how we tend to work. Sometimes it's not always as flexible as that. It's not always as rigid as that. But some of those points I've mentioned there, the experience of the developer, the type of development, the lender that we're going with as well, and the timescales that we need to work towards, essentially, the greater your experience, the longer amount of time that you have, and ultimately the rates that you might be willing to pay for a lender, it does provide you with more flexibility. I'm not saying that just paying the world gets you everything, but in some respects, if you might be at 0.9, 0.951% a month on finance for 6, 12, 18 months, if you then tip over into 1.05, 1.1% finance, and looking at that, how that, pros across the APR of the year, of course, moving from something that might be 9 and 10% to actually something more like 14 and 15%. But actually, if it allows a deal to even go ahead, it might be worth paying more. If it allows you to exit and there's fewer exit penalties and fees, that might be actually greater for the ultimate margin and profit in the project.
Just looking again at this whole deal, we've got to think about what if we talked about experience there. Obviously, a lot of people that could be brand new listening to this will go, well, I don't have any experience, so how can I get the money? The model we obviously teach is about being the CEO and building a team. So whilst I might be a businessman and I don't have any experience in property, I'm going to engage in a full professional team with many, many years experience, and they're effectively going to run the project. I'm just running the business. Does that give me that credibility to borrow that money?
It does. It does. It's a really good question, Richie, as well, because I suppose there's two angles. The perfect angle is that you are an experienced developer and you bring in an experienced team. And the other two angles are, of course, vice versa. You're not experienced and you bring in an experienced team, or you are experienced and you bring in an inexperienced team. Of those two latter options, you being inexperienced but intelligent, I suppose, having a commercial mind, but bringing in the right support that has a CV, those structural engineers, the contractors, the architects, bringing in those experienced minds is the stronger play of those two things. If you don't have the experience, just make sure that the power team that you bring in absolutely does, because genuinely the lenders will ask to see that. They'll want to see a CV of either recent projects, similar projects, from all these people that are working in and around you, providing those specialist skills.
Excellent. I like the way you said you're intelligent, I suppose, and that was pointed directly at me. So I appreciate that, Hugh. I mean, don't suppose. Going then to, let's assume someone's got no money to put into it, because we talked about they can have a percentage of the deposit, that 30% deposit, they can have that and bring some private funding. Let's assume we're in a position where, and because it's more difficult to do development without any money, and let's assume we don't want a joint venture. Let's have a scenario where someone's done their first project, all their money was in their first project, another deal comes along. So they don't have any seed capital, but it's a really good deal. They've got their professional team. They're already running on their first project. Are you happy if they raise all that deposit through private funding, or is there any way that they could raise the whole 100% commercially?
Yeah, and whole 100% is a bit of a catch-all statement, really. We have seen circumstances where that is the case. The reality is, if you've got a project that is complete, or let's say you have equity in an existing property, and that could move into your residential property as well, or a portfolio of properties, personal name, limited company, what we can do is cross-collateralize. So if you had enough equity in those properties, we could potentially raise some funds to fill the gap between purchase costs, construction costs, and I suppose that deposit, for want of a better phrase. We can raise a certain percentage of that from other security. That can absolutely be done. It takes some time to work out those figures, and you've got to be fairly clued up, have your portfolio to hand, have mortgage statements, understand what your property might be, or your properties might be worth, and any sort of outstanding borrowing against them. What does that leave you to play with? And then from the amount that you have to play with, we're working at a percentage of that. It's not all of that that you can cross-collateralize, again, just to give the lenders some comfort that there's not going to be a negative equity situation if it all went wrong on all the deals. But that is absolutely the most common way that we see to do it. You are right, Richie, beg, borrow and steal from family or friends, or go to that formal...
Don't steal. We can't recommend that anyone steals.
Yeah, sorry.
Okay?
Steal was probably an incorrect word in there. But if you can go to friends and family, absolutely, that is a route. And of course, we're moving into a time now where it's very common to joint venture, find angel investors. And again, there's another conversation to be had there to make sure that where those funds are coming from, we need to see a source of funds. Looking back 5, 6, 7 years, it was probably a bit more flexible. Lenders didn't go back very far to look at the source of deposit. Now they are going back and back and back. And that's not just the duration of time to find source of funds. It's bouncing back through individual bank accounts as well. So just because a month ago it came from X bank account, take me back to find out where that source of funds is coming from.
I'm glad you said that, Hugh, because you mentioned stealing it. We could not trace that money back. You can't, in your proof of funds, you can't track that back. You say, well, it was under my auntie's pillow and I stole it. That's not acceptable, is it?
It's definitely not. And, angel investing, borrowing and being lent money under commercial arrangements is becoming so common now. Yeah. And it is a really good way of doing it. And everybody can win in that circumstance. But, I'm sure over time, it's not quite there yet. The archaic side of commercial finance does come through in this way. But open banking, getting access to, the movement of money in people's bank accounts will come in over the coming years. It's not quite there yet. But you do have to, where I was going with my point, which is you've got to do your due diligence on where that money is and that angel investor. And just because they say I've got lots of money, or because they maybe have a high profile or a social profile or whatever it might be, you have to do your due diligence, no matter what you think of them or the pedestal that you may or may not put them on. Make sure you know.
Yeah. Good stuff. Quick one to finish up on. What's your views on 2024 and 2025? We're in a potential election year. What do you think your views are, not necessarily based around finance, but of the property development market space over the next 2 years?
Yeah, and I do quite like answering these questions, if I'm honest, because I like to keep my ear to the ground of what's going on in the market. We see it from deals that are getting accepted, deals that are getting pushed back, deals that are getting completed, and everything in between. And the economic and political, and probably the political sphere in particular now, is having an impact on the property market and the finance markets. We've got a general election that has to happen by the end of January 2025, but will likely take place this year. And what we're starting to see is, Conservative Party well behind, in the polls so far. And I suspect we may end up in a Labour government this time next year. What we've started to see with the Conservatives is much of their policy changing and beginning to support property investors once again, as they've been in power for 12, 13 years now. Over time, you see their policies slightly move away from their sort of core supporters to try and bring in those periphery supporters. They've now seen that has really just been a bit of a wishy-washy process, in my opinion, and they've moved back to that core element of supporting property investors, business owners, entrepreneurs. We've seen that recently with changes to tenant legislation, with change to rental legislation, with change, to EPC legislation that should make it a better place to invest in property, certainly over the next 12 months or so. But how it's also starting to impact, going to that local authority and that economic sphere as well. I see pictures all the time. You see them in the media. You see these high streets that are, there's tumbleweed going through them, isn't it?
Yeah, absolutely.
The local authorities are well aware of this. This has come from, lots of diversification, investment in retail parks, investment in commercial facilities, the rise of e-commerce over the last 10 years. Everything has been built out of town and to support out of town commuting, traveling. COVID doubles down on that because it takes everyone away from the offices and working from home again. All of a sudden, there's a huge urban sprawl. And back at the CBDs and these business districts that we've known and loved, and the high streets, they were a bit dilapidated. Now, the local authorities have realised this, and this is where the opportunity, permitted development rights, existing commercial property to residential is a huge opportunity now, because shops aren't going to come back. It's not commercially viable. The landlords aren't flexible enough. They'd rather just sell up and start again on a new venture, and that's absolutely fine. But what it does for the smaller property developer, the individual property developer, there's huge opportunities to look at, mixed use, commercial property downstairs, couple of flats upstairs, care home completely converted as a full conversion, for example, serviced apartment. We've seen conference centres, old pubs, YMCAs, they're now holiday lets or short-term lets.
Yeah.
And the kind of creative spaces around that is really, really good. And we see this as, it's just going to absolutely boom for the next 2 or 3 years. Lots of the internal investment in those urban spaces, the larger parts of it, where you see lots of flats and high rises going up, is supporting student accommodation. And it is the big PLC house builders that are building, those first-time buyer properties or larger detached and new build spaces. But they are pushing out, aren't they? They're pushing out into the brown belt and the green belt in some respects. Actually, we need to start reusing and recycling existing property. And that's where this finance comes into its own. I really believe that. So there's an economical side of it. There's a political side to the sphere, isn't there? And for me, huge challenges last year where there wasn't a great deal of client appetite for finance. There was huge lender appetite because they were making big margin. We're now in a position where it's slightly turning on the tides. All the media you're hearing that the rates are coming down, particularly in the residential space. Commercial is less volatile, I would say. They look at it on a slightly larger and more macro scale, so they don't move the products as much. But we're definitely seeing that clients are coming back in force on certain ones of our products that we've seen 20 or 30% uplift in client inquiries against this time last year. And lender appetite, certainly in the first 6 months of this year, there's going to be huge lender appetite and they're going to race to the bottom. Once they've raced to the bottom, we might see it cool off. We have some challenges with lenders in the second half of the year. But right now, I will be looking at property prices as well. Will we see 4 or 5% knock off property prices across this year? Probably. I'd get people to go find some money. And in the first half of this year, find property, do developments and use a broker.
Good stuff. Well, as Hugh said there's a boom over the next 2 or 3 years in this. Hugh, look, thanks for coming in today. Thanks for being on board. Absolutely true. If people want to get hold of you or DNA, what's the best contact details?
Yeah, absolutely. Email or phone in the first instance. You come straight through to our client services team. Phone number 01422 557 240, or drop us a quick email, hello@dnafs.co.uk.
Just read those out again for me if you could.
Of course, telephone 01422 557 240 and the email hello@dnafs.co.uk.
And what we'll do, folks, we'll put those details in the show notes. Obviously, if you're listening to this on podcast, slightly more challenging if you're running along, but actually you can get the show notes here on YouTube and you can pick that up. And please do reach out to Hugh and his team and hopefully they can help you. Hugh, thank you for coming in today. Thank you for spending a bit of time with us. And I look forward to seeing you and some of your colleagues in the room with our students in the next coming weeks.
Thank you. Thank you ever so much for having me.
Thanks, Hugh. Wow. How good was that? Getting Hugh here. I mean, he's one of the senior guys there at DNA, getting him on here, spending his time, telling you what's going on in the market. I love that overview of the marketplace. It really is a terrific time. If you haven't listened to my YouTube 2024, what's happening in 2024, I've given a whole opinion there, which sort of backs up and runs parallel with a lot of stuff that Hugh's saying. So have a look at that. If you're interested and you want to dip your toe in the water, if this is brand new to you and you're thinking about property development, grab a pen and paper, write this down. 6-figure roadmap, and there's a link here for you, propertyceo.co.uk/SFR. propertyceo.co.uk/SFR. A little bit of free training, dip your toe in the water and see what you think. Obviously, if you like us, please like and subscribe, and we look forward to seeing you on the next edition of Open Door. See you soon now. Bye-bye.